Hey, it's Michael Saul, also known as Tiny, with the market recap for the week of January 25th and the look ahead for the week of January 28th, 2013. Before we get started looking at the major indexes, just want to remind everyone that the newsletter is still in beta test mode. You can go to the link that we will show you on the screen. It's stockmarkettrendsx.com/newsletter, and you can access all the newsletters we've done so far. They're archived there, and you can also access the present newsletter as soon as it's posted. And usually we get it posted early in the morning. I usually complete it late at night and send it out, and it gets posted early in the morning. Now, of course, we will have a paywall once we start charging for the newsletter, and that's going to be soon, probably within the next 2 weeks. So this is your last chance to take it for a test drive and see if it's something that fits into your trading plan. It's going to be very reasonably priced. You can see I really practice the sales spiel here, right? It's going to be very reasonably priced, so it's not going to break the bank for anyone. And if you look back at the newsletters and you read the content there, we have look ahead for what's going on in the week. We have the daily situation report. We have a trading tip of the week. We have the canaries in the coal mine, which is a column written by my partner, and we have the sector spotlight every week. We look at a different sector. We go over stocks to watch, and then of course we have some swing stocks with some option alternatives if applicable. And it's really something that, in my opinion, is what an active or a not so frequent trader. It's not just for people that are looking to trade every single day, but even if you're not trading as frequent, there's still a ton of value there because we cover swing trades, we cover stuff that may continue in momentum. So check it out, and of course, always send your feedback, good or bad. We're big boys, so we can take it, and we've already taken some advice from some people. They've done reviews for us, and we've made the changes that we agreed with. And just because you suggest something doesn't necessarily mean we're going to do it. But stuff like adding more charts to the stocks I'm talking about and all that stuff. So we look to try to accommodate as much as we can. So anyway, check out the newsletter, stockmarkettrendsx.com/newsletter. And like I said, you can access all the previous issues as well as the new issue when it comes out. So let's take a look at the market. Now, the S&P just kept on going here. And as you can see, we're starting to get stretched from the short-term moving averages here. We are overbought. This is not really parabolic, but it's in creeper mode here. And this is the strongest type of trend. Okay, a lot of people think, oh, big volatile bars are the strongest type. They're not. Okay, when they creep up like this, this is just relentless buying, and nobody's selling because there's no reason to. Now, trends end in a climax. All right, so I would still expect for there to be some sort of blow-off, even if there's a mini blow-off like this, right? You saw something like this, paused, and then we got the push up here. All right, so right now I'm still bullish here. The S&P looks good. The Dow looks good. Okay, they both look like they want to head the Dow. They both look like they want to head to all-time highs. The Russell is already at all-time highs. It's coming into some resistance here, which is the 127% external retracement of this swing down. The mid caps, okay, they're at all-time highs. They look like they're headed for 200. Only thing that's bringing up the rear is the NASDAQ. And that's because of Apple and its wonderful breakdown here. And Apple looks like it could be headed to 4.25 and on its way to 400. I mean, this is just an ugly gap down. It broke down out of here. I was saying, as this was setting up, I was talking in the live chat room how, this looks like a bearish setup, but there's nothing to do ahead of earnings. You can't just guess because we've seen bearish setups and we could gap up, all right? And look at Google. Google's a prime example of that. Okay, Google was pulling back, tested the 50-day, and then boom, got over that hurdle that we've been watching. And Google looks like it wants to test its all-time highs. But back to the cues here, Apple is definitely causing this to be stuck in the mud here. I mean, you got the transports, they're flying. Okay, you got the utilities, which were lagging. They just broke their 200-day moving average. Okay, you got the semiconductors, they're coiled up, look like they want to go. The banks, okay, the brokers, just strong here. So, there are other reasons why I'm not uber bullish here. Okay, reasons like we're overbought and other timing indicators that I talk about in the newsletter. But I mean, this is, in my opinion, the main problem here. And I'm thinking that if the NASDAQ does get off its butt and does decide to go higher, I think that could be when the market actually does get the deep pullback. Right? The NASDAQ will come up, it'll be a work done type of scenario, and then we can pull back. But again, I talk about that in the newsletter, so it behooves you to go check it out there. So, I mean, for now, we are cautiously bullish here. I still think we're going to go higher. I still think we're going to hit the all-time highs. Had a couple of really nice movers in the newsletter in FedEx and Potash. Okay, Potash was a nice one this week. FedEx we had for a couple weeks after it broke out of this pattern here. We also had CVX. That looks like it wants to test this high, but we're already out. We grabbed it down here. And these are all quick swing trades. So, I hope they're quick swing trades. Sometimes they have to go on for a week or more, but I'm looking to get out of them as soon as possible. I want to get in and see it pop up right away, right? I don't care how long they hold for. So anyway, so that's really it. I mean, it looks like we're gonna go higher here. We are overextended, but pullbacks for now still look viable. I think if the NASDAQ does get in gear, that's when I'm going to start watching for a potential climax, a potential work done kind of move. And nothing's saying that the NASDAQ has to get in gear. If Apple just keeps getting cracked until they reweight the index, I mean, it could be just stuck in the mud here. So, the tone I'm saying, and I said in the newsletter, is cautiously bullish here. I think we're going to all-time highs on the SPY and the Dow. The Russell and the mid-caps are already there. And the NASDAQ, who knows? Right now, it's just kind of chopping around. So that's it. And don't forget, like I said, check out the newsletter, and I will talk to everybody again in the daily email or in next week's video. Have a great trading week.